Hello everyone. This is the pre-market report video for today, 6th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, lot of viewers wished me to get better. I am really honored. Thank you very much for the kind words. At present, I am feeling much better. So without delay, let's get into the today video. First, quick takeaway from previous session. Yesterday, market was completely driven by the individual stocks. No overall market momentum. In fact, most of the Asian market at that time traded and closed flat to positive. So the negativity was only Indian market. I mean, if you see the Nifty's negative contributor, almost all the 50 negative points comes from two IT stocks, Infosys and TCS. And the next biggest dragger was Bajaj Finance Twins. Here, the whole IT sector itself down above 1.5% since the rating agency CLSA issued the warning that IT stocks got more downside potential due to its weak demand outlook on the next financial year. In addition, they downgraded both TCS and HCL to underperform from sell rating. I mean, sell it's worse. They downgraded further to underperform. Then for Bajaj Finance, I couldn't find the exact theory, but the possible one might be yesterday RBI barred some of the non-banking financial companies. For example, they barred IIFL from issuing the fresh gold loan due to some regulation issue which made the stock to drop over 20%. Similarly, they barred another called JM Financials from financing shares and debentures. Again, some complaints issue. So I'm guessing the issue in the Bajaj Finance yesterday drop off over 4% might be the combination of sector and technical weakness. I mean, yesterday it broke its long-term technical support 6,500 rupees and the pivot chart support S3. And on the positive side, it's mainly PSU banks and auto stocks. Here, most of us know last year for the first time when JP Morgan announced that from 2024 onwards, they are going to add the Indian bonds into their emerging bond index. Indian market celebrated it and it now expects to bring roughly around 30 billion US dollars in the current calendar year. And the major beneficiary will be big Indian banks and PSU banks. Similarly, yesterday, Bloomberg issued the statement that they are going to add Indian bonds into their emerging index from Jan 2025 onwards. Now, here, this expect to bring additional 20 to 30 billion US dollars, which in turn I expect along with the Kotak Equities analyst PSU bank upgrade made the PSU stocks very positive. About auto sectors, it's mainly Tata Motors. Its share price increased over 3% as they announced that they are going to demerge and list their commercial and passenger vehicle segments into a separate entity. Here, we know yesterday market was down and the advanced return ratio was just 0.5. So, twice the number of stocks down compared to the increased one. Hence, the overall market itself was very negative. Despite that, yesterday both FII and DII were net buyers. FII net bought for 575 crore rupees, whereas DII net purchased for 1,835 crore rupees. Then coming to US, S&P 500 opened mild negative, but the moment the service payment data was released, the selling was accelerated and closed near lower end. I mean, for February month, service and composite PMI data both came as above 50%, which means the sector is expanding, not contracting, and both of them exceeded the analyst expectation. Here, the service payment data is the one that's very important. I discussed multiple times in US, near 80% of their GDP comes from just servicing sector. Hence, this higher PMI data is the direct indication of increased service demand and it increased the stubborn inflation worries. In addition, as I said on Monday video, tonight, US Fed chairman is going to testify in front of House Representative Committee, like what's his expectation about economy, what's the inflation direction and interest rate direction, why all those questions. So that also to some extent triggered the profit booking. Individual stock wise, Tesla dropped 4% as their China's production in February month fell 19% compared to last year. And for Apple, same China problem. As per one private market analyst company, iPhone sales in China dropped 24%, made the stock to down 2%. Most of us know both Apple and Tesla are index heavyweight. Hence, US market down significantly. Dow Jones dropped 400 points, or we can say over 1%. Same for S&P 500, down over 1%. Nasdaq was the one that down most, 1.65%. And VIX, as in correlation, it increased 7% and moved near 14.5. Despite this global momentum negativity, early morning today, 3 a.m. Indian Standard Time, GIFT Nifty closed at 22,435, equating it with a spot market indicating flat to negative. No transfer of US market negativity at all. Then regarding Indian ADR, we know the negativity in IT stocks and Nasdaq was down significantly. In line with that, both Infosys and Wipro down near 2%. However, banks ADR closed mixed. HDFC Bank increased 0.8% and ICICI Bank down approximately 0.6%. About oil, it haven't changed much. At the time of this video, Brent crude trading around $82 per barrel and WTI crude closed above $78 per barrel. So those were the things happened yesterday. Now let's look at the new India specific related info. First, about Reliance. There was a rumor that Reliance retail business segment are in discussion with UK's fashion brand ASOS for the complete takeover. I mean, though this is positive news from business expansion perspective, Reliance is very big, so I don't think it will impact in the share price. In addition, last night Reliance GDR closed 0.3% negative. Then second, Bell got the order book for 9,500 crore rupees from Indian government for the NTPC's thermal project. This I consider as positive. Let's hope it would trade positive. As a summary, Nasdaq closed super negative. In line with that, Indian IT ADR was down significantly. However, for some reason, GIFT Nifty is holding up. I guess this Bloomberg bond addition and its related detailed analysis by more analysts added some positive. Let's see. Another positive was yesterday both FII and DII were net buyers. Moving on, as per stock open interest, Metropolis Healthcare, Ramco Cement, Shree Cement, SBI Life Insurance, RBL Bank, Bajaj Finance and Bajaj FinServ got an increase in open interest along with a negative close, indicates the short buildup. On the other hand, Manappuram Finance, Muthoot Finance, Sun TV Network, Motherson, Bata India, Bell and M&M Financial got an increase in open interest with a positive price close, indicating the long buildup. About the things to look out, during our market hours at 12:30, Germany's trade data, and in the aftermarket hours, very important Fed chairman speech in front of US House Committee. Then private non-farm payroll data, number of job available data and weekly crude oil inventory are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 30 points gap down and throughout the day it was volatile and dropped below 22,300, but finally it recovered some and closed above 22,350. Thus, after straight 4 days of positive close, Nifty closed negative. On the daily chart, it formed doji kind of candlestick pattern, indicating indecisiveness among buyers and sellers about further market trend. First, on the negative side, the hovering momentum indicator had a negative crossover. However, it looks like it has reached the equilibrium line, indicating the consolidation is near mature. For a potential rally towards 22,600, Nifty needs to close above 21,400 level. And on the downside, major hourly moving averages are placed in the range 22,370 to 22,260 zone, which expect to act as a crucial support zone, and until Nifty manage to hold on to this zone, we can expect a next leg of up move to resume. So for the short term, the sentiment is still positive. Then in case of Bank Nifty, it continued to sustain above the downward sloping resistance trend line for yet another session, and it managed to stay above all key moving averages, outperforming the Nifty. Thus, on the daily chart, it formed a bullish candlestick pattern. On the upside, the immediate psychological resistance is at 48,000 and a successful breach of this level is anticipated to propel the index towards its all-time high. On the downside, the crucial support level is at 47,000 to 47,400 zone. Then, as per weekly options data, the maximum call option open interest was at 23,000 strike, followed by 22,400 and 22,800, with new call option writing at 22,600, then 22,700 and 22,500 strike. Whereas on the put side, the maximum open interest was at 22,200 strike, followed by 22,000 and 21,700, with new put option writing at 21,700, then 22,300 strike. Thus, the options data indicates that 22,500 to 22,600 is expected to be resistance area for Nifty, with support at 22,200 to 22,000 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.